Hey, good morning. How we doing? Listen, real quick, I'm going to show you guys something that you will most certainly appreciate at some point in time in the future. This is an amortization schedule. Amortization schedule. You see this, right? Amortization schedule. Um, Everybody that gets a mortgage should have an amortization schedule. And I am saying schedule, but yes. Anyway, Um, let me show you how to attack the interest on an amortization schedule and save you a lot of money. So here's the deal. On a 30-year loan, 360 payments, your interest is obviously the highest percentage of your payment. So like I've got a $2,000 payment, $1,824 of that is going to interest. You dig? $1,824. So I've got to make my payment on that every month. However, you see this little guy over here called principal paid? Only $245 goes towards the principal. However, you see this right here? So these are monthly payments. These are monthly payments, right? But you see this right here? If I paid $247 after I made my monthly payment, so I make my monthly payment. If I go then and pay another $247 as a principal payment only, in the manner that the lender will allow, I can save $1,823. So essentially, if I make my monthly payment, because you can't skip making your monthly payment, but if you make your monthly payment, you can then turn right around and make an extra principal payment, therefore eliminating the interest associated with that principal. So let me give you a perfect example. If I decided to add up the next 11 months, 2, 4, let's call it 500, 750, 1,000, 1,200, 1,500, 1,750, 2,000, 2,002, 2,500, 2,700. Let's just round it off and call it $2,800. So I make my payment of $2,070, and then I come in and make another payment just towards the principal of that number we just calculated. It's going to save me all of this interest from this month on up. So $1,800, $1,800. So for the next 11 months, so if I make that $2,000 principal payment, I'm going to knock out the interest for the next 11 months. And let's just round off to 1,800 times 11. That is $19,000 of interest that I will have saved. $19,000 of interest that I will have saved by making these principal payments from months 2 to months 12 in advance. So you got to continue to make your monthly payment. You just can't skip those. But look at the amount of interest that will be paid over the life of this loan. You know how mortgages work. $438,000 of interest on a $307,000 loan. Okay. So if I pay the principal, and it is actually most effective. It's most effective for me to be doing that at the early part of the loan because look, the principal amount is very low. It's very low, right? The principal payment amount in the early part of the loan, when the interest is highest, the principal payment amount is super low. So these $200 principal payment amounts, if I go ahead and pay those ahead of time, it will knock out and eliminate all this interest that they should be collecting. I still have to keep making my monthly payments. Okay, but it will remove the interest. This is why you're not seeing an amortization schedule in a lot of your mortgage packets. Okay, this is why you're not seeing it. Because if you know how to eliminate that interest by making principal payments only, in addition to your monthly payment, you could possibly save yourself a couple of $100,000. A couple of $100,000 in interest. So there you go for the day. Attack the amortization schedule. If you have a mortgage and you don't have the amortization schedule, get your lender to give you the amortization schedule. Ask them, how do I make principal-only payments? Ask them, how do you make principal-only payments? Make sure you do it in the method that they want you to do it in, and start saving on interest today. This is why when I used to be a lender, I would tell people and educate them on this process and tell them, it really doesn't matter what your interest rate is. It really doesn't matter. It matters, are you comfortable with your payment? If you're comfortable with your payment, let's go to work on the interest. Let's attack the interest by looking at the amortization schedule and appropriately dealing with it and eliminating it. Thanks. Let me know what questions you got.